What's up, you guys? Q here from Hyperstocks. Today we're going to address one of the biggest questions that's being asked on the stock market right now, and that's going to be, what should you do about the Apple and Tesla stock splits? Now, if you've never been through a stock split, let me explain what it means. If you own one share of Apple at $400 and August 31st comes and the stock splits, now you're going to have 4 shares at the price of 1. It's like buying a pizza or slicing up a pizza. If you have one whole pizza and you slice it into 4 slices, you still have the same amount of pizza divided into 4. Now, if you decided to slice it into 6 slices, the true foundation stays the same. You're going to have the same exact size pizza divided into 6 slices, therefore only creating a larger quantity but not a larger value of the pizza. And that's exactly what's happening with these stocks. If you own one Apple stock or one Tesla stock, it's going to be divided for Apple by 4, for Tesla by 5. Now, why do companies do stock splits in the first place? Typically, stock splits happen because companies want to provide more liquidity in the market. Liquidity just means how easy and fast people can buy in and out of the stock, with buyers and sellers being available on each side at all times. The lower the volume and the lower the stock count, or the lower the stock float, the lower liquidity the stock is going to have. Now, Apple and Tesla have no problem with liquidity. They both have enough shares on the market to be bought and sold all day through tomorrow. Now, my humble opinion tells me that they're splitting because they're targeting the millennial investor, or the investor that doesn't have as much in their bank account or their stock portfolio. With that being said, we are going through a phenomena right now in terms where everybody is starting to gravitate towards the stock market because of how accessible stocks like Robinhood have made it for the millennials or for the average Joe to buy and sell stocks right from their phone. With that idea came fractional shares. So a lot of people will start to question, if fractional shares exist, why do companies need to split their stock in the first place? It's pretty simple. It's because of exclusivity. Nobody wants to tell their friends that they own half of an Apple share. They want to go out and say they own 1 to 3 to 5 to 10 Apple shares at once. If you only own half, it's not really something to brag about. Now, millennials want to have that exclusivity, and CEOs like Tim Cook and Elon Musk see right through it, and they saw this as a perfect opportunity to get buyers into the market and to boosting their stocks' overall market value and market capitalization value. Now, that is a very key thing to understand when trying to understand a stock split. Now that the stock is splitting, does anything really change within the company? And the answer is no. The company's value, or underlying fundamental value that comes from their overall balance sheets, their cash flow, their yearly, quarterly statements, and etc., all that stuff remains the same. The stock's market value may go up because of the hype of the split, which is very normal. Anytime you get a very large positive news article about any stock, you might see the market react to it with haste because everybody hops up on it without understanding why this is happening and what change does it really make for the overall market value. Nothing really changes in the fundamental value of the company. So, if you are trying to understand whether you should buy now or later, the question really becomes about your own belief in the company and your own understanding of their future and financial statements. Now, I'm not telling you to go out there and read financial statements, but I am telling you to get a plan. If your plan is to make quick money on Apple and Tesla, you might as well buy during the hype and then sell when the hype is no longer around, because eventually the market has a way of correcting everything. It's called a correction. It's a normal market term where the market sees the value of a stock way too high, and investors and traders start to take profits on that stock, and the stock starts to come right back down into the correct territory. So that may happen with Tesla and Apple. So should you buy? Should you sell? Should you not buy at all? That comes down to the plan that you have for the stock. Personally, I'm a strong believer in Apple's business model, and I believe that they'll be around for a very long time. So I load up on Apple shares every time I see an opportunity. Doesn't matter if there's a split or not, it just matters that I'm a believer in the company, and with over $200 billion in cash flow, I believe that the company is not going anywhere. With Tesla though, I believe that the stock is rated a little too high in my own opinion, as Elon Musk would say. Since then, the stock has shot up probably over 30%. I didn't do the exact percentages, but It comes down to your own personal opinion. Is a stock really worth that much money to put in your low risk or high risk portfolio? Tesla, personally, I'd place in a high risk portfolio because it is in a new sector. Yes, they are leaders in that sector, but that doesn't mean that they are the greatest of that sector. Nokia was the greatest of the phone sector at one point, and so was BlackBerry, and then Apple came along and took them right out. Now with Tesla getting so much more electric vehicle competition and soon more you're going to see more and more companies try to take that spot from Tesla. So maybe allocate a little bit of money towards Tesla and allocate more towards other electric vehicle companies. But in terms of Apple, personally, I strongly believe in that company, so I don't really care if the stock's splitting or not. I don't really care if they reverse split. All I care about is that the stock moves up and forward and the company's business model remains the same. Anyways, you guys, I hope this video was helpful. If you like what you see, please give us a thumbs up. If you want to see more, please go ahead and subscribe. Thanks for checking in.